Good morning. We're going to give everybody an opportunity here to join. ADP here in less than a minute. Market sold off yesterday. Challenger layoffs already printed this morning. Half of last month, so bond unfriendly. Expecting 113 here out of ADP. Why is this not going live? I think we're live. Hopefully we're live. Anyway, 98,000. So better for bonds. First reaction, slightly better. In and of itself, probably not going to move the market a ton. NBA apps off a little bit last week. I'm going to see if we could pull up ADP's release. Usually takes a couple of minutes to release. While we're waiting for that, I'm going to talk about last night's data. Let me just see something here. So overnight, mixed data, not a ton of it. I would say the thing that is most bond friendly that came out overnight is in the Eurozone, harmonized consumer prices missed. Stocks mixed overnight. Here on shore, we're indicating worse. VIX is up a bit. Crude back below 70. Not 100% sure why. I mean, there's definitely some cracks potentially forming in the memorandum of understanding. We'll see. I feel like Brent is as close to 70 as it's been. It's at 72.35. Most commodities are down. Going to keep refreshing this ADP. All right, so June. Job creation was uneven in June. Financial activities and information were among the gainers. According to Dr. Nella, the pace of hiring is a telling story of both supply and demand. We know it's taking people longer to find work, but there are also signs of labor supply constraints in certain industries. For now, the overall effect is a slowdown in job creation. Interesting. That's on the heels of a couple of pretty reasonable months, but job gains across every size, establishment size, goods producing generally up. Let me get into the actual report here, if I may. Where the heck is it? Where the heck is the link to this report? Wow, are they making you subscribe now? I think you have to actually subscribe to the report. Anyway, net. I would say that I like the language on this report better than I like the actual report. Bonds are sort of unfazed by it. And so we move on to tomorrow. We've got ISM at 10. We got the new Fed chair at 9. Prices paid expected at 79. Headline expected at 54 on ISM. And then tomorrow, early close and non-farm payroll. So to talk a little bit about yesterday's action, I mean, a lot of that was month end squaring up, but certainly ahead of two big reports. We talked about being all in lock. If you locked, you're welcome. Now we're kind of back in the vicinity on some of these levels, where we're kind of back in the float boat. I would say on fives. I'm probably more after this benign number, and I it's hard to think that tomorrow's number is going to kill us. Although, I mean, it's just such a volatile number. But to me, if I just simply look at charts, I'm probably floating 5 and 6.5 coupon. I'm locking sixes for sure, and 5.5s I think are mixed. Seth, where are you seeing? This can't be right. We must be super wide on 5.5s. I'm showing 5.5s up 8 on the day, and I just don't believe that's true. Where are you seeing 5.5s? On the Fannie side, we're down 1 to 3 ticks pretty much across the board. On a 1 month chart, Fannie 5.5s are about mid board. Similar on a 3 month chart. We're at the worst levels of the last week, that's for sure. So, again, yesterday's play on being locked up, certainly for the first 2 weeks of July, if not all of July, was absolutely the right call. Kind of an easy one today. I mean, it's really, so yeah, 5.5s are down 5. So if I take that down 5, gosh, certainly at the lows of the week, put us in the vicinity of support. Par 7, par 10-ish is sort of the last 30 days worth of support. If you go back to March 24th, par 5-ish was support. So purely on a chart basis, and if I combine chart with the data that's behind us, right? Hard not to want to float 5.5 coupon here. In fact, I might argue pretty much across the board, everything has a bit more of a float bias than perhaps sixes. 6.5's trading at 103.16 in round numbers at this point. We're almost 100 basis points off last month's levels. So that's a pretty interesting arc for that coupon. So let me tell you what we did yesterday is we accumulated a pretty reasonable short position across most coupons. Yesterday's refresh in the afternoon, we were pretty reasonably short 5s. I would say that we had a slightly short, we had a reasonable short bias 5.5s, and we were marginally short 6s. And this morning, we lifted some of that short 5.5 position. Hindsight 2020, would have rather would have rather have not done that. We actually took some coverage yesterday afternoon to get even shorter. So when we entered this morning after the overnight action, we still found ourselves reasonably short. And so, we kind of try to put our money where our mouth is. This works across the board. Generally speaking, our interests are aligned with yours. I think down 5 is maybe a bit dramatic. I mean, we're only up 1 or 2 basis points on 10s. We're sitting at 448. I think I'm a little bit surprised that we're not breathing a sigh of relief on this ADP number, but make no mistake, it's not like it's some sort of blockbuster number that is going to be the impetus behind a Fed cut. And with all this data ahead of us, you can understand the apprehension. So yeah, just to recap, you should have locked yesterday. I told you to lock yesterday. And if you didn't lock yesterday, I'm not a fan of chasing your losers, but if fives are 98-10 and we were, around a 99 handle, we lost about 75 basis points since yesterday morning, right? Insofar as 5.5s are concerned, you didn't get hit as hard. And again, 6s and 6.5s haven't really moved that much. So, I think if you're selling rates 6.25 and above, right? I think that it is a loan by loan, day by day decision. Even if tomorrow goes our way, and I have mixed feelings about that, right? But even if tomorrow goes our way, what do we really have to gain in those coupons? I don't see it. You pull a 3-month chart on 6s, and I don't know if you could see that. I know we have some, I don't know what you have to gain. And certainly a 98,000 print on ADP, despite Nella's language, the language was definitely bond friendly. The idea of a complicated economy, or specifically job situation, which is what she's, specifically speaking to, is something that we've been talking about ad nauseum here for the last year, probably the last 5 years, by the way. And, post-COVID especially has exaggerated the wealth gap. So, the long and the short of it is, I am basically still 100% locked 6.25 and above. I think once you get into the 6 3/4 range, I'm maybe a bit more, maybe a bit more indifferent on that lock bias, maybe 50-50, 60-40 lock. Fives at this point, if you rolled the dice, you might as well wait it out. And then 5.5s, I'm like 30% lock. Really depends on, the problem that you have now is it's almost the opposite, right? Not quite, but these short-term lock considerations, well, now you're betting against that we're going to blow through support. And again, I'm using the 98,000 print in some of Nella's language to support the idea, no pun intended, that we're going to bounce off of some support here. And what you would do on a short-term lock scenario is lock that dip. Going into a long weekend after a sell-off, could we see some squaring up? If we print a bad number, I don't think it's out of the question that we could recover about half the losses that we saw yesterday, unless it is some crazy bad, minus 100,000. So, that's to me what I would be playing for. Keep an eye on things. 10 o'clock is important, specifically the prices paid component. We certainly want to see a 70 handle. There's absolutely no doubt about that. Again, if you floated through this yesterday, you missed the boat. For me and for our desk, it's going to be a somewhat quiet day because we did our business when we needed to do it. Before the bottom fell out. So now you just sort of sit back and wait for the next opportunity, which, by the way, might be tomorrow, right? It's been a while since I feel like since we've had some correlation between ADP and non-farm. I could be wrong about that, but, we printed an ADP miss. Do we tie that up with, a non-farm miss tomorrow, expecting 110? Here's a really good question. Are we going to revise down last month's 172? In some respects, that might be more important than the front month. I think what we would really want to see tomorrow, if we don't get a bond-friendly number, we'd want to see a bad claims number and a miss in earnings, and that could potentially take the edge off of an inline or a slight beat non-farm. We'll see. If you have any questions, post them real quick. Otherwise, normal time tomorrow. And remember, bulls and bears make money, pigs get slaughtered. Have a great day. Choo-choo.